My guest today is Niklas Savas from Redeye. I don't think there is a person in this beautiful world who has met, studied, and read more about serial acquirers than you, Niklas. So thanks a lot for coming to the podcast.
You're too kind. It's a pleasure to be here. Thank you.
Let's start from a journey from all the way from university to Redeye. What exactly are you doing, and what have you been doing?
Yeah, sort of a bumpy path. I mean, I went to university back in 2008, graduated 2011, started to work at Swedbank, one of the largest banks in Sweden. And I had my sights to become an equity analyst already then, but I started in an area called collateral management. So very different from that, but I sat quite closely to the equity analysts, and after a while, I just realized that the bank wasn't really, they were decreasing the number of staff in the equity analysis area, and I just found it hard to get in that. Instead, I more or less worked in the department I started with, started to do more business development, and after a while, I realized that I needed a change because, I mean, being at a big bank, it's quite bureaucratic. You have a hard time getting your ideas through and so on. So I actually joined a crypto company for a few months, which sounds quite strange at this time and very different from my thoughts now. But I actually resigned after 1 month, and that maybe says it all. And then I started my own consultancy company and did that for 5 or almost 6 years, and it was quite successful. And after like 5 years, I had my first daughter, and all my spare time, which I usually put a lot, doing research on companies and investments and so on, my spare time was almost gone. So I realized that, okay, now I have to work with this, otherwise I will be bored. I will be sad in the end if I can't pursue my passion. And the CEO of Redeye contacted me because I was writing for a blog called investingbythebooks.com, where we read books and review books. And he wanted to do something with us, and a podcast came up, and I got the chance to do the Investing by the Books podcast by Redeye. So I jumped on that chance and also became an equity analyst then. That's more or less the background. And after a year or so, after doing analysis on different types of companies, because, I mean, Redeye is quite broad. We do sort of cover tech companies, life science companies, and many different types of companies. And I just realized that, okay, now serial acquirers is something that's close to my heart. I mean, I understood the model quite early, and we had a few companies that we did research on, and so more or less I did a move to try and be the main analyst for a few of those companies, and that worked out, and we started to do sort of a bigger job on the whole sector, covering them. I mean, all the serial acquirers in the Nordics on a quarterly basis. We created this event that has been growing very much. I mean, we could go in deeper into that, and more or less after around 3 years now of quite deep coverage of the sector and my background as an investor and having focused on these companies before, I think we have come quite far, but we're still scratching the surface in my view.
Let's try to first understand the Swedish serial acquirer model, because people and investors, and many of them has been even my podcast guests. They've traveled all the way from Australia, US, other countries from Europe, all the way to Sweden, Stockholm, to events to meet you and the founders and investors of those serial acquirer companies to just learn what you guys are doing and why have you been performing so well. So what makes Swedish serial acquirers unique compared to those in other regions?
So I think, I mean, just to begin, I think it's sort of a great testament that people do the pilgrimage to Stockholm every year now. And we have a lot of people joining our conference in March. And this year we will have around 30 companies and I think maybe 200 people in the crowd. So, and as you said, I mean, people are flying in from all over the world. And I think I think Sweden has a rich heritage of sort of industrial companies and managers who have been running decentralized operations for a long time. I mean, there are a few names that I could name. I mean, the sort of the Electrolux Troika. We have, I mean, Carl Bennett, who came from that, and now is of course, the main owner of Lifco. The Bergman and Beving companies with Anders Börjesson in the lead. He understood this model quite early and sort of less revamped the Bergman and Beving company. So I think there is a rich heritage of strong management who understands the decentralized model, and many of them realized quite early that they ran good companies, which spit out a lot of cash flow, and they realized that they could use that cash flow to acquire other companies. I think that's sort of the base of many of the Nordic success stories, that they started as operating companies and realized that they could add acquisitions to it. It's not that they sort of did a private equity model of raising a lot of capital and started to buy companies. It's the other way around, and those have been actually the most successful ones. I'm not saying that the other model couldn't work, but I think that's quite a big difference from what I see with other companies. That, I mean, the base is to be sort of an operating company who then started to acquire companies. Otherwise, I think the model, I mean, we could go deeper into the model per se, but I think it's not super different. I think maybe one difference is that synergies is sort of a curse word. I mean, that's not something that these companies talk about, even though there are sort of some light synergies. You can call them synergies. They're not pushing them on subsidiaries, never. So I think that's quite a big difference.
When it comes to capital allocation, what is your thought? Like you mentioned, they're using this free cash flow to acquire other businesses. Why don't they just improve the current platform to just expand or so-called organically? Why have they chosen the way to grow through M&A on holding company wise? Does it is it because of there isn't enough potential when it comes to the main platform, or there are just so many great companies they could invest by using this cash flow? What is your thought on this capital allocation and compounding capital through acquisition?
So look, I think priority one for all these good companies is to improve the businesses and grow organically. It's just that if you buy a small company with a high market share in the sector, it's hard to grow for the first thing. I mean, to grow is quite competitive, I would say, but you have a really stable position, and I mean, you won't lose your market share. So I think when these companies see an opportunity to grow organically, I mean, they would definitely do it because the return on investment is often much higher if you grow organically. It's just that it doesn't cost so much, and these companies release more cash flows than they need to grow organically. So I think so more or less the second pillar is to grow through acquisitions. But I think, I mean, many of these companies, if you talk to the management teams, they would say that, I mean, grow organically is what we want the most. But I mean, that's a problem with many regular industrial companies that are not pursuing M&A, is that, I mean, they could reallocate a lot of the cash flow or a bit of the cash flows to grow organically, but definitely not all. If they would put more money into that, the return on investment would go down quite a lot. So I think that's more or less.
Talking about organic growth, I've been doing lots of research on Röko because it's been like an insane success story. They've grown, they bought like 27 businesses, majority acquisitions, just 8 people in the HQ, and the CEO, Fredrik Carlson, I'm pretty sure he was the second most important person in Lifco, learning from Carl Bennett, right? He was doing this there, and then he quit. He started his own firm and got an investor from, I think, the ex-CFO of Spotify. So coming back to this, he has said that it's good enough for us if organic growth is 1%. And I think I've been reading their letters. It's been like 1 or 2%. It's never been 10%. So even though they have like 27 portfolio companies, shouldn't it be higher? And
yeah. I think like this. I mean, 1% is, I would say that to grow a bit more than GDP growth is probably what they look for. So I don't know, GDP plus 2-3%. I think they should do that just through increased prices, because I mean, Fredrik Karlsson he understands this model really well, and one thing that he will tell his business units is to try to raise prices all the time. So I think 1% is, I mean, if that's been the case for the last few years, that's due to the weak economy more than anything else. I think they have a higher ambition than that.
Mm-hmm. So what are you've seen so many of them, 30 of serial acquirers coming to Redeye Serial Acquirers 2024 event, more than 200 people. What are, if you can say, like some of the core principles of the best Swedish serial acquirers, and what have you seen?
I think there are a few. I think what I said there in the beginning, that most of them started as operating companies, and they grew from that. I mean, they have a long history, many of them, or all of them actually, that's been really successful, strong heritage. They never sort of overextend. They don't do these large acquisitions. They don't put up too much debt. I mean, one thing you could see is that in the hype of 2021, when this sector was super hot, I'm not saying that it's not hot now, because it is, but then it was crazy. And they got a lot of questions from investors that, I mean, why don't you buy more? Why don't you increase the pace? And they just stay the course. And they've been, I mean, richly rewarded for that, because of course there is a risk in that sentiment that you do some bad acquisitions. And I think you can't do more than maybe 1 in 10 that is bad, because then it would take too much management capacity. And of course, you risk also that you don't release the cash flow you need in order to keep the engine going, so to speak.
And what's your thought on how they are able to maintain such a strong PE ratio? I mean, I'm looking at Lifco stock at the moment, and PE ratio is like 49. It's pretty crazy, and it's almost doubled since 2022. So it's...
Yeah. So I think more or less the 5-year average may be in the, 30, 35 range, or at least I would say that's maybe the 10-year average. But I think the P ratio has been between sort of 30 and 50 for the last 5 to 10 years. And more often in the 30s. I would just say this, of course, if you look at the history, many of these companies have compounded earnings per share by above 15% for 20 years. And if investors start to think that, okay, I would think that this would continue for 20 years, then you could pay a really high multiple for that. So I think the high P ratio is more or less a resemblance that investors believe in the long-term story, that they will continue to compound for the long term. And talking about that, it's, of course, if you pay a P of 50, you have sort of a multiple contraction risk, because it needs to continue to compound at this rate and be quite stable for the long term. But it's of course, it's a testament that many investors have realized that this model is great if done right.
Now, we're talking a little bit about their acquisition strategy, because they're doing a lot of those, and their deal making. Maybe you can give some of the examples, like what's the ideal company profile for some of those companies? Like what type of businesses they are looking for, size-wise, growth-wise, niche-wise?
I think there are maybe 2 categories. First of all, I would say sales of between maybe 50 to 500 million Swedish, so up to almost 50 million euros. That's quite rare. I mean, above like 30 million euros, in some climates, you have a lot of competition from private equity then. But there has been sort of a window now for the last maybe 2-3 years that private equity hasn't been as aggressive. So many of these serial acquirers have been managed to do a few larger deals. But I would say the sweet spot is maybe in the sales of 5 million euros up to 20 maybe. And I would say if they could, they would definitely try to buy sort of businesses with structural growth behind them. So businesses that have been growing for, in the history and has a good prospects to continue to grow, with, of course, strong cash flows and high return on capital. But it's hard to find, if you try to buy maybe 10 to 20 of those companies every year, it's hard to find sort of 20 stars. So they settle also with sort of cash cows that they could maybe buy for a lower multiple that won't grow as much, but will release good cash flows and also have low capital needs. So I would put it in those two categories, and at all times, of course, defensible positions, high market shares in a geography or a sector is definitely keys. So it's seldom, I would say, that they buy a company that's not top 3 in a certain niche.
So even though the strategies are probably different when we compare different buyers, but what have you seen? What is the usual structure of the deal, and how do they finance the acquisitions? Do they prefer cash, stock, debt, and how much of it, and what is the ratio?
Yeah, I would say often it's sort of 50% from their own free cash flow and then 50% debt. So they keep the debt level stable on a relative basis, but usually they prefer to pay in cash and not raise equity. We have a few examples where companies use equity, but I think that's not sort of the base. Sometimes the companies raise equity sort of before or after they do an acquisition, but not sort of that they pay with shares to the company that they buy. That's not so often the case. And then typically, it's been more and more frequent that they leave a minority, so that either the entrepreneur that sold the company gets that minority, or they give a minority to the new CEO, because if there's sort of a succession, you put a new CEO in place, sometimes you give that CEO and management team part of the equity to sort of sit in the same boat as the serial acquirer. And then typically you have an earnout, which are between maybe 1 to 2 years often. And that's more or less just to close the gap between, because the entrepreneur will always say that we will be able to deliver something great. And the buyer, of course, thinks that, that's maybe a bit stretched, but we can sort of close the gap by having an earnout instead of paying everything up front.
And do you have any statistics it's all great on the paper, but what about the post acquisitions? Have things always gone as they expected? Do you have maybe some stories or statistics of out of 10 acquisitions, maybe one maybe doesn't go that well and they need to spend tons of time on this, and this maybe affects their next acquisitions? Or do you have any news, any statistics, any information?
Yeah, I think, it's more hearsay than anything else, but I think many says that, okay, maybe 1 in 10 doesn't go according to plan. And then I think what the good ones have understood is that, you shouldn't put too much effort into those. So of course they try to, they put more effort in sort of improving the bad businesses. That's always the case. It's hard to not do that. But I would say that many of the good ones, they're not so patient with bad results. So they will be quite quick in maybe setting up a new strategy and following that closely. And if that doesn't work, then often they put in a new CEO, and sometimes they merge the company into another business unit and so on. So I would say that they don't accept a company that underperforms over year after year. Then they put efforts in place. So, that's the case with this. We talk about decentralization, and they leave a lot of sort of autonomy to the entrepreneurs, but they are also, they're following these companies on a monthly basis. They have maybe 4 board meetings every year, and they stay close to the companies. And they're not so patient with bad results, I would say.
What are the biggest struggles when they're going through, and maybe when you have met the GPs, met the investors, what they have been sharing to you? What is the biggest headaches, and what are the struggles on the day-to-day, week-to-week of what they're
I
trying?
think it's people, get the right people, because if you buy companies that are, on the countryside, not as big, it's hard to do successions. It's hard to find the right CEOs. And if you miss that, if you choose the wrong one, then you lose maybe 2 years. So I think having that sort of ability to find right managers, which is really hard. I don't know if anyone has sort of a secret sauce for that. That's, I think, the biggest headache for these larger established serial acquirers.
And what about the synergies, and how do they integrate those acquired companies without disrupting the operations of, like, there have many of them, like I think Lifco has like 100 plus companies or even more.
They don't integrate them, I would say. First, they give them sort of, okay, this is how the reporting should be now. You should send this report on a monthly basis. We will be on the board. They, of course, teach the company the operating model that they have, sort of how should we think about everything from cash flow management to pricing and sales training and so on. So they have these programs that the companies can learn from. But otherwise, they don't do any sort of work with synergies. They don't have any big team that comes into the company and sort of revamps the strategy of it and so on. They think, they buy it because it's a great company and they want to keep it like that. And they know that if they would put in a big team, they could destroy the culture of the company. So,
and going even maybe more specific when it comes to post-acquisition, how many changes they usually try to implement, with, if any, within the first maybe half a year or a year? Or yes, we talked about Röko, and the number one goal always is to just increase the prices of the products and services. But what else?
No, I think on the prices, I think many of these companies they buy, they have cost-based pricing. And what the serial acquirers want to do, they want to change that into value-based pricing. And that's an effort that likely takes a few years. It's nothing that goes quickly. I would guess that, the first half year or so, it's mostly about sort of getting the reporting in place and step by step sort of, in the early days, of course, agree on a strategy, both short and long term, and then just following the company on a monthly basis and be on the board and help them as much as they can. But it's not sort of a huge integration work. It's I would say the teachings and the lessons and so on. Maybe these companies have sort of sales training two times a year and training for sort of cash management a few times a year, and it's not so much more than that. And then they maybe meet physically with all the companies once or twice a year. So it may sound a bit sort of basic, but I would say that's how it is.
And what about the competition on deals? Lots of capital, lots of people wanting to acquire those great businesses. What have you seen? What have you heard?
Yeah, so definitely different in different markets. I would say Sweden has been really competitive, and to buy sort of a quality company in Sweden, if it's an auction process, then that would be quite competitive. And I would guess many of these larger acquirers would hear about it. But then there are these cases where they have been meeting the entrepreneurs for 5-10 years, drinking coffee, talking, is this the right time to sell the company or not? And then it's very, a lot of that is sort of people dependent and having a good relationship. And so those acquisitions definitely come from time to time as well. So that you have that pipeline that you're nurturing over the long term. But then I would say that a reason why many of the Swedish acquirers have been going abroad is, one thing is that they're getting larger. They need to do more acquisitions, and the pool of potential candidates in Sweden and the Nordics isn't large enough. So they have been expanding to the UK, I think northern Italy, and also sort of the Benelux countries. And I think that's sort of increasing every year, and we will see more geographies that these companies will enter. I think Germany has been sort of an area that many companies want to get into, but they haven't done a lot of acquisitions in Germany so far.
Mm-hmm. And how is it typically? I know reading the annual letters and quarterly letters of Röko and doing the research, they only have like 8 people in the HQ, and while managing like 27 companies, and the companies are not even in Sweden, they're all over the place in, I think, UK, Denmark, Norway. First of all, how do they do it? What are your thoughts? How are they so efficient? And number two, is it typical? And are all those serial acquirers so good that they can manage a large portfolio with just so few people in a headquarters?
Yeah, I would say the good ones definitely have a small headquarters, but I would say like this. I mean, one sort of business area manager could potentially handle up to 10 companies. So if you have around 30 companies, that would mean maybe 3 business area managers that have the responsibility for those companies. Then, of course, I mean, you need a CEO, you need a CFO. You likely have a head of M&A is quite common. And then you need sort of a reporting economy team, and that could be partly outsourced or not. And then typically you have at least, I mean, one who is skilled in law, I mean, M&A law. So I think one thing is some of these companies have maybe M&A scouts and some don't. Some have sort of bigger responsibility for the business area manager to scout for deals, and otherwise rely on brokers. So that depends a bit, but I think all of these companies have understood that you should keep the sort of the HQ cost at a low level, as low as you need. So they don't have any team. So if something goes wrong at a subsidiary, they don't have the resources to put in a team. They instead work on sort of on the board level and also, of course, assist the companies on a regular basis. But I think they would rather than change the CEO and see how it goes than sort of put in a team.
Which company have you studied the most? Have you read the most?
I would say Lagercrantz, because I'm the head analyst at Redeye for Lagercrantz.
Okay, and what's their strategy? What exactly are they doing? How has been the last 5 years? How you think is going to be the next 5 years?
So I mean, the background there is that, I mean, it has a heritage from Bergman and Beving. It was spun out of the mothership in 2001. And they had a hard time at that moment because they were big in sort of telecommunication, distribution, and electronics. And after the IT crash, many of these companies suffered. So Jörgen Wiig became CEO, I think, around 2005, 2006. And he had been at Bergman and Beving before. He had ran his own pricing consultancy company. So he was really skilled in pricing. And first couple of years, it was more or less just getting the existing businesses up to profit margins that could support a growth journey ahead, so that they could release enough capital to grow. And then after that, it's just been a long story of buying better and better businesses, higher margin businesses, more own products. So before, I mean, they had more or less, it was more focused on distribution. And they've been buying companies with their own brands. And I would say it's not been a rapid pace. It's been a pace that has been supported by their own cash flows. They've never issued equity, and they have just been using that cash flow to grow through acquisitions. I would say they kept quite a steady pace. And then I would say the last sort of maybe 3 years, I think they have increase the pace of acquisitions a bit. They had maybe a bit too conservative leverage. Now they're still conservative, but it's gone up a bit, and they've been doing a few larger deals that has been super successful. I mean, I mentioned before that sort of private equity may have eased. I mean, they're not as aggressive anymore. So Lagercrantz has done quite a bit larger deals, not big deals, but quite large deals from a historical perspective. That seems to have been really successful. At the same time, I mean, they have also suffered the last few years with lower organic growth, which comes after a time of really high organic growth. Due to the inflation that we had. And the good companies, they were really early in raising prices. So I would say many of them actually benefited from the high inflation. They didn't suffer too much, which also I think is a testament that you have businesses with good pricing power.
How many acquisitions they try to do per year?
I would say 8 to 12 is their target, depending on the size. I think they've done around 8 for the last 12 months. But it's been larger than before. So, the growth through acquisitions in the last quarter was 16% year over year. So they have definitely ramped up the pace. I would guess that would sort of revert down to maybe 10-12% per year, and you add a few percentage points organically. That's how they have been doing it before. And they have been growing earnings per share by above 15% for the last 20 years.
One thing that is surprising for Americans, for example, is oftentimes the acquisition multiples. So what's that it's so high in Europe. So what has been the acquisition multiple on average for Lagercrantz?
For the last 20 years, it's been around 7.
Mm-hmm.
So between 6 and 7, I would say, has been the case. I would guess that in the beginning it was more close to 5, 6, and now it's, I would say, maybe 6 to 7. It's not been increasing a lot for Lagercrantz. They have been really strict in what multiple they pay. Overall, I think the whole group of companies say that they pay maybe 5 to 8 times. I would say that it's more often maybe 6 to 8, but it also depends on the size. If you buy a larger company, it would definitely be in the 8, maybe 8 up to 9 range. But they understand that if you start to pay more than that, sort of the model breaks down, then you won't reach the growth that you need, because if you don't have a company sort of that has really high growth prospects. But the problem with sort of buying a company with really high growth prospects is that it's often more susceptible to competition. So you don't get anything for free in this competitive market. I would say if the structural growth is high, that typically means more entrants will come in the future.
What is the ratio? Is there more capital and more buyers, or more great businesses?
Why it's gone up, you mean, or?
I mean, the current stage on the market when there is...
Yeah. I would say like this. It seems like, of course, there are new businesses starting every year. So you have a steady inflow of new companies that could be interesting in the next 10 years to buy. I would say that as you don't see the multiples going up and you see that these companies buy enough in order to sustain their growth, I would guess that at least for now, there are enough candidates and the competition isn't too high in the market. So, but that's something I always keep track on. It's hard to say that. There are, of course, thousands and thousands of companies out there if you look at sort of market research and so on. But I don't give too much to that. First of all, then you of course include companies that are already part of a conglomerate. Secondly, it's hard to know how many of those that are really interesting for these serial acquirers. They are quite strict in their criteria. So I would rather just follow sort of the market from a micro perspective, see how the multiples turn up, how many acquisitions they're able to do, what they're signaling to the market, and so on. That's what I follow typically. And I don't see a big change in the last few years. There was a top in 2021 where multiples went up, especially in Sweden, but that's been easing down, and now it's back to normal, I would say.
What have you seen? Like, when is the moment they're like going to a new market, new country, like starting from focusing only on Swedish companies, then, okay, I don't know, we couldn't find anything, or we bought already many of them. So to decrease the risk, let's go and look in Denmark, Norway, UK. When does it happen, and what's the thought process behind this? What have you seen?
It's quite a long strategic process. It's not something that, okay, now we need more. We need a bigger pipeline. Let's enter a new country. I would say the good ones, they are a few years in advance. So they start to, work on their relationships in other countries and look for often they look for companies that resembles the ones they already have, so that they understand that even if they don't understand the country specifics, they understand the market, they understand the sort of the company, and they have expertise in that area already in the company. So if they tried, I would say it's rarer that they buy sort of a completely new company in a new country. But it's a long process. It's not something that goes quickly. I mean, it's a question I always ask because it's quite interesting to see how they think about planning for the long term. But it's also that they don't go into every country. I would say they are quite risk averse in what country they go into. They want sort of the industry, I mean, the dynamics to be quite similar to the Nordic dynamics, and especially Sweden.
When it comes to the deal flow and what have you seen? Those businesses, they come to your events, they participate, they read the letters. How many deals are coming straight to them compared to brokers? Because when reading about Röko, they built a relationship with 1,000+ brokers.
Yeah.
So
I would say that quite a few rely quite a lot on brokers. So I would say it's hard to set a number on it, but I would say more than 50% of deals often come from brokers. Then there are a few exceptions of companies that don't rely on brokers as much. I mean, I cover Stibtech at Redeye, and they are much more reliant on internal deal flow. They have a team that actually calls prospective companies that, I mean, they search for companies, and I mean, they have built up their own database. They search in that and try to get meetings with entrepreneurs. So I would say it's really rare for them to buy through brokers. So I think, and that's a few others also have that. Others, maybe the larger ones, I would say, typically rely quite a lot on brokers, and also they rely on their own business area managers for them to come with deals. They don't have a team that cold calls prospective entrepreneurs. It's more that they rely on, they have a big network, they have a lot of companies, and they try to get them to understand that, okay, if you know an entrepreneur, you know a company in your niche that is well renowned, then try for us to have a meeting to try to buy it.
So looking at the Lagercrantz stock at the moment, in 2019, it was trading like it was 29 SEK, and now share is 227 SEK, so almost 10 times. What has changed in the past 5-6 years? And when you look at Lifco, it's 566, not 10 times, but 566.
Yeah, two things has happened. The CAGR in terms of earnings per share has been quite a lot higher than historically, and the multiple has increased. So you have both those. They have performed super good the last years, but they've also got rewarded for that with a higher multiple. So those are the things.
And when looking at the smaller ones, how often and what is the desire for them to go public versus not going public and staying private? Does it give them an advantage, or
could get them sort of an advantage in lowering financing costs and strengthening their brand? I mean, brand is quite important, I would say, and for entrepreneurs, if they sort of hear about a company that is public, it's sort of then it's likely more trustworthy. Otherwise, sort of, if you have the machine going, at Röko, for example, they generate a lot of cash flows. I don't know if they will raise equity in coming IPO, but I would guess that they don't need that. It's one thing for the competitive side, one thing is brand, one thing is maybe better financing options. And of course, if you have sort of owners in a private company, you don't have liquidity, and some investors may have invested on a shorter time horizon than forever. And then it makes it much easier, of course, for them to sell their shares and to let other long-term investors buy the shares.
One great thing you said about Lagercrantz was things started to go better for them once they started buying businesses which owned the brands and owned the products. I think there is a lesson there. what have you seen? Is it common for others as well to buy such brands, or their focus are oftentimes just very different compared to in what type of strategy they have when they got started?
Yeah, I mean, I would say like this, from what our research tell, it's not been, you don't sort of have a higher return on capital for maybe a distribution business versus a product company. Product company, you can have higher margins, but it's also typically maybe more capital expenditures and so on. So all in all, I would say the returns hasn't been much better for a product company. It's just a matter of buying good businesses, and maybe you create that expertise within your company that buy product businesses, then you have sort of a recipe on how to work with them, and the same with distribution businesses. So I wouldn't say that one is sort of per se better than the other. I think both can work. Mixing in other types of companies can be a bit difficult, I think, if you sort of also buy service businesses, then and contract manufacturers is a different area as well, where you don't have your own IP. Those can, of course, work, but it's just a different model, I think, and maybe you need different expertise in how to handle those businesses in the right way. So I think many of these businesses buy quite similar companies where they can enforce the same principles, I would say is a key.
Again, when doing the research on Röko and Fredrik Karlsson, when asked from him, like, what are their risks? And he said that one big risk is the recession. So when it comes to such a diversified portfolio, is there any more risks than this?
I think why he said that is that that's the major external risk. And he's probably quite confident in the sort of mitigating internal risks. One thing is, of course, I mean, as I said before, you do a big deal that doesn't go well, he wouldn't do that, I would guess. I mean, he knows he's too experienced. Otherwise, it's overextend in terms of maybe buying, I mean, overreach in terms of leverage, and then you have maybe a mild or a mild recession that comes from time to time, and then your net debt to EBITDA goes up too much, so you need to stop your acquisition engine. We have seen that quite many examples of that. If you have to stop for a year or two, the market won't look 10, 20 years ahead then. So the multiple gets crushed if you need to stop that. They don't really believe in the long-term story then anymore, and you need to sort of show to the market that you are an acquisition machine again, and that you're doing this. I mean, that you have the compounding that you need to see.
So now a very personal question. You've been sitting and reading and analyzing all those businesses, all those industries. You know the people, you know the companies, you know I guess you're sending an SMS to Fredrik Karlsson, he would find half an hour for you to share his lessons. So if you do it yourself, like setting up a proper business where you start acquiring great companies, first of all, how would you set it up? What industries you'd focus on, and what type of people you would try to get to your small head office?
I would probably copy Röko. I think they understand the model really well. And I mean, if I would start from scratch, I would need to raise capital. And to raise capital, I mean, even though you say that I have a strong network, I don't have the experience, the operating experience. I don't have the sort of the brand why Fredrik Karlsson had it quite easy to do that is because he had delivered for 20 years. So, and he was renowned as a great business leader, and you need someone like that. So I would rather take sort of the role of them. I mean, for example, Johan Blad, who is the co-CEO of Röko. He's young, he's really energetic, and to have that role is maybe a bit easier, that you have sort of the people that has the brand, has the networks, and then you can learn from them. But what I also say with Röko, I think they understand that you need to buy sort of slightly better businesses, long history of profitability, of cash flow generation, high margins, because that makes it a bit easier in terms of in a recession and so on. You will still be able to defend the margins much better than if you have lower margins, and to have the defensibility that you need also in recessionary times. So I would say maybe those things.
What do you think? Do you ever consider going that route? Do you have the desire, the grit, the will to do that?
Hard to say. I mean, I'm a father of 2 young daughters, and I know that at this time I would probably have to give up too much of sort of the family time to do that. So that's the good thing with being an equity analyst. You work a lot, but you have quite a lot of freedom when you can work, when you can read. You don't have the sort of, okay, now we have a deal here in Germany, you need to fly out there and close it. And that means that you can't see your family at the time. So I've been sort of working for quite some time, and I am at a stage in life that I don't think it makes sense. I don't know, in 10 years when the kids have gone a bit older, and I mean, I'm 35 now, I will be 45 potentially. I'm not saying I will, but I think the probability is a bit higher then.
I think it's a good point you mentioned, the lessons, and once you get into this, you'll get the experience, because the number one thing I have on my notes when it comes to Fredrik Carlson is, if you have 30 years experience of doing something, it's easier because you know exactly what to do. And another thing, I think he was offered a stake. Like lots of people ask, like, why did you leave Lifco? Because it's a great business, you're doing well. And he said that at the age of 40, I was offered a big stake, but I didn't dare because I had young children and I had recently bought a house. I had loans, so I didn't take the opportunity. So I think it's never too late. The other day I had Ryan Sullivan from US, and he's been all in, like all his life in manufacturing businesses, and he's the hardcore operator. And he got approached by this crazy guy who said to him, and he proved to him that you can raise capital for every deal. And he was just selling this idea of we should do it ourselves instead of you just running a operating business yourself. You should acquire one and own one, and that's what they did. And the point I'm sharing this is he started when he was 48, and today he's 53 or 54. So within the last 5-6 years, they've acquired 6 companies. So it's never too late.
And Fredrik is, I mean, he started when he was just short of 60, I think, with Röko. So I agree. I mean, it's never too late. I just think that you need to realize that it's not easy. You can get it wrong quite easily by just doing a few bad deals. And what I said in the beginning, even though maybe when you're good, 1 out of 10 acquisition don't go well, if that's the first one that don't go well, then you can be stuck and you don't go forward. So we have seen many private serial acquirers that get stuck. Maybe if you buy 10 companies and 3 or 4 are bad, why would anyone put in more money for the machine to get going again? So it's not easy. I mean, I have large respect for these managers who have been doing it for a long time, and it's quite good also to be able to sit in the back seat sort of and acquire stakes in these companies instead of doing it on your own, because sort of it's a lot of work. It's hard work. It's and it's also not at all certain that you will succeed.
So going back into detail again, because you mentioned something very good, like getting stuck because of doing a bad deal. I think again it was Fredrik Carlson who said that it's good to have shares in holdcos that are sector agnostic, because there is a much more opportunity. What have you seen when it comes to those smaller private ones who are just focusing maybe on one very specific niche? Like do they very quickly in year 3, 4, 5 getting into a problem that there is no more businesses to buy or no more good businesses to buy?
I mean, it's not only the case for private ones, also for public ones. If you are not sector agnostic, in the end, you run out of good targets, and to grow at the rate you want, you need to buy maybe bigger businesses, you need to pay up, and then the model breaks down. You won't get the same returns then. So I think being sector agnostic has that benefit of you will always be able to find good companies to buy, and you're not restricted out of sort of the opportunity sets that you have in a sector.
Okay, Niklas. So there's an event coming. What is going on this event, when it is, and why should people fly all over the world to come and visit you and to come to this event?
Yeah, I think it's become sort of the highlight of the year for us here at Redeye. So this time it will be 17th to 18th of March. And we have around 30 companies presenting over 2 days. So around 15 both days. And the first day, it's on the 17th, it's a bit smaller companies, quite a few private ones. And on the second day, it's almost all the large established serial acquirers. And I say, I mean, why should you come? You can listen to presentations of many of these companies online. But the network that we have now, I mean, the people that's coming, it's sort of super high quality. It's a mix of new operators that are starting out, companies that have been doing this for a few years and want to learn, and of course, specialist investors that maybe have around 10 positions in their funds and do a lot of work on each prospective investment and are super knowledgeable about the sector. So I would say like this, I mean, Mick, you've been at the conference, you know that if you sort of talk to a person there, you would meet someone that you find really interesting. This is sort of light marketing now here as I'm talking about it, but we don't do any marketing actually. We don't, because we want the network to grow organically. We want people who really understands and wants to become better in understanding the model to come. And we want to feel that everyone who comes adds something to the group. We're getting larger. As I said, we are approaching maybe 200 people coming. I think maybe we can grow that to 300. But I think more than that, then we probably dilute the quality. And that's the most important for us. We want to have sort of a really high quality group that wants to come every year to learn from each other and to, of course, listen to the presentations and maybe have one-on-ones with the companies. Meet some of these legends. I mean, Anders Börjesson was there the last time. Of course, Fredrik Karlsson will be there. So Jörgen Wig at Lagercrantz and more. So you have the opportunity to meet these people who have been really, I mean, who are the sort of the leaders in this space in the Nordics, which is quite rare otherwise.
And it is rare because they're just there eating snacks, grabbing maybe a beer, and you can just go there and start a conversation and ask about specific things. And obviously what has helped and what helped me last time was that I was doing a bit of research before. So it was very easy to start this conversation because it was about them. So that's I think important as well. But they're all walking around and it's a great experience.
Yeah, last time we had a quite interesting discussion between Per Valdemarsson, CEO of Lifco, and Fredrik Karlsson and Anders Börjesson. I'm not saying what they discussed, but they had a quite deep conversation about certain topics, and you had sort of 20 people who gathered around and wanted to learn from them. So it was sort of one of the highlights from last year's conference.
Okay, so was there anything I didn't ask, or was because I tried to go through as much as possible, because again, you are the guy, you read about that, you do your research all the time, and you live that. So is there anything I forgot to ask, and maybe something, some news or what you've seen or what has come up, or is there anything?
I think there's always more. I don't think we spoke so much about maybe new and upcoming serial acquirers, or I mean that's doing it the right way, but are sort of not as known for the public market. And I think I would encourage people to maybe sign up to Redeye monthly coverage to read our quarterly updates on the sector as a whole. You get a lot of insight there, and you get some help in finding these different companies, and we give you some help in sort of explaining what they do differently and why they are good, and so on. So that's what I would say. Otherwise, I think a lot of good questions, Mick. It was, I mean, a real pleasure to be here. I really enjoyed it.
Okay, thanks, Niklas. And let's talk again in 6 months or in 12 months, because I'm sure there's going to be a lot of newcomers who are today small. 5 acquisitions later, they're not so small anymore. So happy to discuss that in the future.
Will be fun. Thank you, Mick. Have a great day.